Okay, and then Mary, she says, here's a question for tonight's webinar. I can't access it live as I have Windows Millennium. When the chart formation gives a strong reversal signal, for example, a small doji at the point of a triangle, and the market could continue either up or down, what is your opinion of entering a double what-if order? That is, enter a price at which to buy if the market goes up, and on the second order, enter a price at which to sell. You said buy there, Mary, but it would be sell if the market goes down. How might this work? Could it be profitable? And what are the pitfalls, other than the obvious one of getting quickly taken out before the market turns around and heads strongly in the opposite direction? Wow. Okay, so we've got a bunch of questions locked in here. Okay, so if you didn't follow this, what Mary is saying, say we have a triangle pattern that we see on the chart. And what she is saying is when you see the doji here, so you've got a reversal signal, you're seeing the market trading into the point of the triangle, she's saying, can you place an order to sell here and then an order to buy here to take advantage of the market? Now, some brokers, this is what's called a conditional order. So what will happen is the broker knows that if the market spikes up and you're long, that it cancels this order. Okay, it knows how to do that. Or if the market spikes down, it knows to cancel this order. So you would be able to get into the short side or get into the long side. That's called a conditional order, or also what's called an OCO, or one cancels other order. You can set it up as both, or I should say you can set it up either or, depending on what your broker calls it. It's either going to be called a conditional order or an OCO order. What I would say is, she says, how might this work? Well, that really depends on your broker. If it's not one of the two brokers that I highlight on the course, or if for some reason I don't remember offhand if I went over that, the best thing to do is to call your broker. And they either have some videos for you to watch, or they'll walk you through setting that up. Your broker is a fantastic resource, everyone. If you have questions about order entry or how to use their platform, I'm really not the guy to ask. You're better off. I'll answer your questions about trading, but when it comes specifically to using the broker platform, just pick up the phone and give them a call. That's their job. Their job is to make sure that you understand the broker platform and that you can trade with it effectively. So the question, how might this work? Hopefully I explained that. Could it be profitable? Yes, but it depends on what the market does. And this is something that relates to anyone who is really looking to just set up automatic orders and let the market do what it might do. You have to realize that if you're trading, if you just want some kind of set and forget trading system, you're at the mercy of the probabilities, which means you can run into long streaks of losers as well as long streaks of winners. So could it be profitable? Well, absolutely, it can be profitable, but it's going to hinge on, and your profits are going to depend on how well you place your stops. If you remember last week, in fact, I think it might even have been, no, it wasn't the first part of June. It was a situation very similar to this, where the market had pushed up, was forming into a flag pattern, and I was looking to go short, and the market spiked down and then ran up very quickly. Those types of trades, if you're watching them, you can see the volatility, you can see the market moving very quickly in the opposite direction, and you can get out before the market hits your stop. If you're not watching it, you're not going to be able to do that, obviously. So you just have to keep in mind, you're probably going to run about 60% winners.